So the Fed just met and they dropped interest rates by 0.5 point. I'm going to tell you exactly what that means for mortgage rates because they are actually not the same thing. I'll get into that and everything you need to know about mortgage rates in today's video. As a reminder, I'm Mike Thornton. I'm a local realtor in the western suburbs of Chicago. If you're looking to make a move here or want to know more about our area, please reach out. My information's in the description below. So let's jump in. So Fed Chair Powell and his cronies met about a week ago now, based on when I'm shooting this video, and they made the first rate cut since basically COVID, and they dropped it more than expected. Instead of the 1/4 point cut that we were expecting, they cut it 0.5 point, and many folks are misunderstanding exactly what that means. They're expecting to see their mortgage rates that they've been quoted to go down by that same amount the next day after an announcement like that. Now, the Fed funds rate, it can move in tandem over time with mortgage rates in general. Now, there's a typical spread that we would see between the Fed funds rate and what a typical mortgage rate would be, and that can fluctuate between about 2.5 points, but they are not the same thing. The Fed funds rate is really tied to the health of the economy, and it's about how expensive it is to borrow money bank to bank. And again, it is really tied to the health of the economy and of whether they're trying to heat up the economy or slow down the economy by changing how much it costs to borrow money. Now, mortgage rates, interestingly enough, after that 0.5 point cut, didn't really move at all, and if anything, they trickled up just a little bit. Now, why is that? Now, I do fully expect, I will say going into this, that mortgage rates will come down over the coming months, but not drastically, not in the amount of 0.5 point right away because of this news. Now, mortgage rates, and when banks are, basically setting what the mortgage rates are that they're willing to offer in a given market, they are looking at factors like what the Fed funds rate is and the trajectory of the economy and where they should be pricing their loans going forward. So I do think the pivot that they're making is important, but not necessarily the 0.5 point cut. The 0.5 point cut, much of that was actually already priced into mortgage rates before they even sat down and met. The 1/4 point was all the way baked in, and even 50% or so thought that the 0.5 point was possible. So much of that was already baked in. Now, the pivot's important though, and the comments that the Fed makes coming out of those meetings can drive the market even more so than the cut itself. Now, I do think we're at that point where we're going to start seeing cuts coming forward because of a slowing economy, bad job numbers, tons of revisions as far as how many jobs we've added. And so that should send mortgage rates lower over time. Now, many of the key forecasters of mortgage rates have put out their guidance for 2025, and just about all of them fall between a mortgage rate on a 30-year fixed loan between 5.25 and 5.75. We sit just over about 6.15 currently. So there is a little bit more room there as far as projections go for rates to go down, but it might take some time for that to play out. So again, Fed funds rate is not exactly what, those cuts do not necessarily correlate to mortgage rates. They tend to move in tandem over time, but that could take some while to play out. And again, there's that typical spread between a Fed funds rate and a mortgage rate, which has been a little bit wider than expected over the last couple of years. So if that tightens to be in a more normal range, you could see mortgage rates come down. And again, the projection is that they would come down about another 0.75 point over the next year if you believe the guidance that are put out by the big forecasters. I hope that was helpful. If you want to know more about this market, again, I am a realtor servicing the west suburbs of Chicago. Like, subscribe if this was helpful, and we'll talk to you next time.